Worried about tax implication of stock market gain in current financial year? This video is for you. Stock market was very kind this year and I could see a lot of stock run up, and especially Nifty 50, large cap, mid cap, small cap, all have run up. And a lot of people have done profit booking because it is election year. तो काफ़ी volatility थी market में, तो काफ़ी लोगों ने profit भी book कर लिया. And I got few calls from close friends and family की how to save tax. So being a chartered accountant and a stock market investor, so I am giving you few tips. So watch this video till the very end so that you can legally and ethically save tax on stock market income. Profit harvesting and loss harvesting are legal and effective ways to reduce your tax burden. So harvesting, what do you understand, is actually you are doing for a long period of time. So not reaping income today, but you harvest for the next season. As you know that there are two kinds of gain. One is called long-term capital gain and second is called short-term capital gain. Long-term capital gain is for the securities, listed securities held for more than 1 year, and the taxation basic rate is 10%. So if you want to save long-term capital gain, there is something called profit harvesting. What does it mean? Section 112A of Income Tax Act allow each assessee to save 1 lakh tax in long-term capital gain. So there is no charges for 1 lakh tax of long-term capital gain each year. So if let's say you have 3 people like me, my wife and my mother, let's say, so I can save 3 lakh of tax. That's 10% rate, 30,000 basics and plus surcharge extra maybe 35,000. So that is called legally saving 35,000 or maybe 10,000 per assessee income tax by booking profit up to 1 lakh. So if you book profit of 1.5 lakhs till 1 lakh, you don't have to pay taxes. So one way. Second way is called loss harvesting. Loss harvesting, let me first explain short-term capital gain. So short-term capital gain is taxed at basic rate of 15%. So I'm sure a lot of people have done profit booking because stock market has run up in this financial year and so people have booked profit. So let's say you have a 15 lakh rupees of short-term capital gain. There must be some stocks which will be showing red figure, which we don't like. So let's say you have 2 lakh of loss on one stock or 2-3 stocks. So you can book loss of that stock, and that instead of paying tax on 15 lakhs, you will end up paying tax on only 13 lakhs by netting that 15 lakhs and 2 lakhs. So that is called loss harvesting. Now you will say that you actually booked loss. So what you need to do is the next day, so you need to actually buy the stock again so that tomorrow you want to hold that stock for a long period of time. But there are two things which you need to worry about it. One is called volatility of market. So let's say you have booked a stock loss and next day it may have run up in one day. Possibility, which is little negligible, but that is one. Second thing is your period. Let's say because for a long-term capital gain, it is for 1 year is taxed at 10% and short-term is at 15%. So if you book loss, so there could be a possibility of converting that 15% to 10%, but by booking it, your period will get reduced. So you may need to pay tax tomorrow. That stock will run up at higher rate. That is the only word of caution. Profit harvesting and loss harvesting are legal and effective way to reduce your tax burden. So there is something called tax avoidance. There is something called tax saving and planning. So it comes under tax saving and planning, and every stock and market investor who is there for a long period, they do some kind of a harvesting. So wish you a very happy, prosperous financial year. So apply this knowledge, because knowledge is not power. My mentor say applying knowledge is power. So use this laws to your advantage and save taxes. Share this video to your friends so that they can save taxes, and subscribe to my channel for more financial videos. Thank you.